Traders, Anthony here. We're going to have a look at the Kiwi CAD. As always, please read the disclaimer. If you gain something from the video, it'd be amazing if you gave me a thumbs up and commented. I'd love to hear your thoughts as well, and subscribe naturally. So with that, let's get into the video. Enjoy. We're looking at the Kiwi CAD on a 4-hour chart. There's a few things going on here. I like this price action. I'm going to give you two trade ideas. One will be a day trade and the other will be an intraday / swing trade. First up, on this time frame, let me just widen the chart, the screen a little bit here. We've got this green candle back in here, distribution range, prior to quite a significant move to the downside. And above here, we've got this. You can see these candle wicks up, and back up in here as well. There's a lot of volume behind this move here, and there's a ton of stop losses sitting in here. A ton of stops, buy stops, resting all through here. That's ripe for the picking, and of course what happens? They take out these stops. So there's a liquidity pool from back here, and this range builds on that. So there's more stops being placed into the order books through this range here. Massive build up of liquidity. Now on the higher time frame, the monthly time frame, it's clearly bearish. My bias is to sell this, and I think the banks are definitely invested short. So this looks to me like this is a hit on these stops here that will give the big guns what they need in terms of buy stops to be able to fill their order books short. And then you get this candle here. This is a significant move short or sell. There's a lot of volume behind that, so I'm thinking that they've worked their shorts in through here, and this is going to be looking for more downside. So that's my thought process with this. So from that perspective, I'm thinking there's two trade opportunities here. One is a day trade opportunity and the other one is a swing trade. So if you're going for a day trade opportunity, let's just go down to the 1 hour and then we'll go back out and we'll have a look at it from the higher time frame. So as far as a day trade opportunity goes, this price action, I like it. The pullback up into these lows here would give me an entry. Stop, well, there's two schools of thought. One, you could go above the recent high, and if you're a little bit conservative or a bit worried, you feel more comfortable to give it a bit more room to breathe. Same risk, keep your position size the same, go above this previous high then. That's one idea, and we've got a target potentially down around here. That's what, nearly 4 to 1 risk reward. Okay, so that's quite nice. 4 to 1, something like that. These stops under here would be a target. So that's your, there's a TP level. Now, if that's the case, this is a day trade, maybe an intraday, and I'm always going to be looking to take 2/3 off at 1 to 1. You know what I prefer? I prefer that. And 1 to 1 risk reward comes in around this dotted line here is a monthly level, guys. There's a TP level, a 1 to 1 risk reward where you would take 2/3 off or close it and then leave the rest in to run and see where we go with it. But at this point, then you pull your stop loss down, and that's a profitable trade, risk-free, and you leave 1/3 of the position in, and it's happy day. So that's idea number one. Let's have a look at the second idea. What I want to do is go out. It's going to go right out to a monthly, and then we'll work our way back, and I'll show you this. Just have a look at this chart. Lower highs, lower lows. Clearly, the banks are invested short with the New Zealand CAD. What I've done is I've just marked up some of these lows back in here, the candle body lows. The liquidity under these lows is a potential target. So if they're looking to capitalize on this short over time, there's an ultimate destination down here, I think. Now, have a look at this in terms of pips. What do we got here? So it's going to be a similar entry, fairly similar, with, let's just go with this and see where we end up. That's nearly 1,008. There's 1,800 pips involved here. That's my ultimate target. 1,800 pips. Maybe think about that for a second. So we go in here, monthly time frame. Oh, and the other thing that I want to point out with this is, I'm just trying to build the argument short. We've got this swing Okay, think of a trend. Okay, so it expands, retraces, etc. Lower lows, lower highs. Okay, so lower lows, lower highs. If that's the case, then it's reasonable to consider there's a swing, there's a price swing, there's a retrace, A, B, C, D equal measured move. So there's a potential A, B, C, D outcome looking at these price swings. So with that in mind, let's just narrow down here. I like the price action on the 4 hour for an entry. We looked at short and a target. Well, let's just do this. Grab a short position. Do something like that for now, and then we'll refine it as we go down. But this is on a higher time frame, the monthly time frame, down into here, and there's all right, that's a 10-to-1 risk reward. I'm happy with that. It seems logical to me that the path of least resistance, if you want to look at it from that point of view, like they've hit these stops up here. Now there's stops resting under here. We've got this price swing here, high to low, lower lows we're looking for, so that's a target. So I'm thinking that at least this level here is a no-brainer. What happens after that, who knows, but at least that's a proposition to unload or to take partial profits, at least down in here. That's that. Let's just now go down to the weekly. What do we got? Just go in at market on the weekly time frame, or you could refine it on that 4H. I mean, I'm good to go with this. Stop loss, like on the weekly time frame, and this is an intraday swing, I'm going to go above this previous high. I'm happy with that, and that gives me what? That's your 10-to-1 risk reward. So if this is my entry point, then I'm looking for the 1-to-1 to take partial profits, and that's going to have to come in trend-based fib extension. I've modified that to give me a risk reward tool. 1-to-1 comes in. Look at these lows down in here above this range low down here. Look at that. So this is where I'm going to be looking to take 2/3 of my position off, 2/3 out, and leave a third in. See where we go with that. I mean, look, if you did that back up in here, look at the outcome. And here's another idea. Just wrap your head around this. Let's say you enter. There's your entry point. We'll do this. Entry short on every pullback. Entry short on every pullback. Look at these beautiful pullbacks on this time frame. Look at that. Look at these retraces. And we get good at finding where these entry points are. 1, 2, 3. You know, you ride this all the way, and you've got a third of your position. You're taking money out every time. It's a 1-to-1 risk reward. You're taking money out. You're banking money all the way. And then you got a third of your position. All of these guys are still running for however long this trend goes. You're banking money, you're building your account, and you're continuing to add to this position in this trend. So that's my plan of attack with this. Take some of those out. So as long as this trend continues, I'm going to be looking for every opportunity to enter. What else can I say about this, guys? Daily, what does it look like? Yeah, we've been down there. Okay. See, and on the daily time frame too, this is quite a nice setup. We've got this range here and the potential for this to pull back up. We've got this imbalance, actually daily imbalance there, right? So that's a potential target. Now, this could pull back up into here to resolve this imbalance. So that's why intraday slash swing trade, we're looking after ourselves here in terms of the potential for this to come back up, right? And look to fill this gap here. I think that pretty well sums it up, guys. That's my take on the Kiwi CAD. I'd love to hear your thoughts. Comment. Let's just go back out, because the weekly time frame with a market entry is my thing at the moment with this, and that's the setup. Keep in mind that once you trade down into here, that's 166 pips. That's going to be in the money at that point, and then you pull your stop loss down a little bit behind up in here, leave it there and let it go. Yeah, your comments, click the links below, check out our free Telegram, and with that, have a great day, safe trading, see you in the next one.